Trading's in the management, not in the charge. Hello, fellow traders. Welcome to the live show with Rob again, where we can talk about a few trades. Don't forget, trading's risky, so if you don't like risk, don't trade. That's as easy as it gets. Can't get easier than that now, can it? Interesting week. Interesting stuff. I mean, I'm short on so many things. If I think about it, I'm short on the UK 100, short on the Canadian dollar, I'm short on the Spain 35, I'm short on the Nikkei. It's quite a number of things that I'm short on, to be fair. Quite interesting. But yeah, we'll see how it goes. There's nobody here yet, so we'll wait for everyone to turn up, and then we'll chat a little bit further and see what we can do. Charts cannot predict the market. Neither can you, neither can I. So we just go with it, and we just go with the flow, and we see where we come out at the end of the day. Rise above the algorithm and understand it's humans who trade. It's not algos who trade, it's human beings. And human beings are behind every algorithm, as far as I can tell. What are we looking at in the long run? Well, the United States dollar, South African rand is still going down. This morning I had a question on Brent crude oil as to how I got into Brent crude oil. Hey, how's it? Well, good that you caught me. Looks like you're the only one who's caught me today. Looks very, very quiet out there. We'll see how this session goes. We'll see if we get loads and loads of other people joining us as well. I had an interesting question as to how I got into the Brent crude oil trade. And I did answer it in the members video this morning, but I thought I'd just bring it up. Very much that I did get into it as a result of it breaking structure somewhere down the line. But I also got into it on a fundamental basis. And while a lot of you think that I don't actually trade fundamentals, I don't. But I do sort of trade on a fundamental basis overall. How's it, David? So I look at a scenario where somebody asked me, why did you choose Brent crude oil for a long trade when Trump's maybe calling it down? Everybody's pressuring oil and all the rest of it. But it's very much a gut feel and experience in the market that I know that when oil is at this level, it's at a very low level. And in all likelihood, it'll probably trade back up to 80 again, like it always does. So I'm looking at from that kind of fundamental perspective of it's on the low side, and always in the past, because it's a cyclical stock or a cyclical instrument, it's going to go up and down, and somewhere down the line, it's going to find its way back up to the 80. It trades between 60 and 120 at any good time. So, or sometimes between 65 and 100, but it's always in that 70 to 80 range. And at the moment, it's sitting at 66. So my logic tells me, if you get a chance to take a long trade on this, it's probably a better idea than a short trade. Because the only time I've seen it go short from these levels or from lower levels is during times of strife or during times of severe things going on in the world causing a problem. And it goes either way with that sort of scenario. Like some things will cause it to go north to 120 and other things will cause it to go south to 0. And that's why I'm long on oil, and that's why I'm sitting with the long trade on oil. It's not because I'm looking at it just solely from a technical perspective. When you're trading, you do have to sort of keep your ear to the ground and listen to other things that are happening in the market as well, other things that might be going on. Don't ignore them completely. All I say with fundamentals is don't concentrate all your effort on those weekly fundamentals, those CPIs, non-farm payrolls, jobs figures, things like that. Those are not going to help you in any way, shape, or form. They're just going to cause volatility in your trading and drive you loony. So don't go there. Don't do that. Don't find that to be your fundamental basis. Your fundamental basis needs to be a broader aspect, like I explained to you now, where you know what, for example, oil is usually does, and you work around that fundamental basis of, it seems to be trading a bit low now. Maybe I should look for long trades, whatever the case. There are many aspects to it, and if you look at the wider aspects, then they do play into it. And then obviously the big things like, geopolitics, stuff like that, they do play into it as well. Hello, Elaine, Coral, Rod. Sir Lunchalot, morning, how's it? Good to see you. Blue Mango, we've got everyone here today. Carl says, what a start to the week. Not much stress for my setup yet. Waiting for Great British Pound. Good day, ladies and gentlemen. Right, so basically, like I said to you guys, I'm actually taking quite a lot of short trades. I'm short on the UK 100. I'm short on the Nikkei. I'm short on the Spain 35. And then obviously I'm short on this Canadian dollar as well. What I did with the Canadian dollar now, actually I did this last night because I took the short. This was yesterday's trade of the day, I think, if I remember correctly. Now, what I did with this is I took the short because, I mean, it played out perfectly. Look at that, the red candle out of the support level. You know, it's just the perfect trade. So you took the trade. It's come down, and then last night I moved the stop loss down here with a view to, you know what, if it takes it out, so be it. I don't mind that. You know, it's great. If it keeps on going south, we'll take the target. So I moved the stop loss into profit, and I'm kind of reluctant to move it back. I'm sort of like, well, it's there now. You know, if it gets taken out for $100, so be it. But yeah, if it goes all the way, great. I'm kind of neither here nor there. The trade is good. The trade is running, and it's running in that direction. Now, that was at $170 earlier. Now it's dropped to 140. So, yeah, it's getting close. But, all right, we'll leave it like that and see what it happens. And so that one, you can't lose a cent on that one. That one is that one's in profit no matter what. I'm not moving the stop loss back. It can stay where it is now in profit. And then I took the short on the UK 100. And my main reasoning for that, obviously, there was some news in the background, something going on, which caused these. I mean, there was a huge red candle. Obviously, it tried to go back, and another huge red candle, which means it spiked. And that just calls bearish all over the place. And then if you draw a trend in here as well, and you've got a clear break on that one, it's broken through that support as well. So that's a clear break to the downside on that short-term sort of bullish run. So it's counter trading that, heading to the downside, looking for that target down there as well. And then I also showed on the video this morning, if you draw an RSI on this as well, you'll see you also get that break going to the downside, which is a clear signal. So we're short on that as well. I have gone into the Spain, and I have gone into the Nikkei a little bit early. So yeah, that one too. But my main concern is the S&P 500 is still going up, and it's broken to the upside. So that is very, very bullish and very, very strong. That doesn't play in well for my short trades on the other indexes, because the indexes do tend to follow each other. But I still do have a gut feel that this S&P's got to correct, because it's going up like a lamp pole. So I don't know. We'll see it. But it did break to the upside. It broke to the upside rather well and rather beautifully. So yeah, there's a lot running here. And the 6600 that I called at the end of the beginning of the year has actually played out, and it's reached it kind of a bit earlier than I expected. So now I'm beginning to wonder if we're going to hit the 7,000 by the end of the year. But before that happens, there really does need to be a bit of a correction here. There's too much overboughtness. And in fact, what a good idea, since we were talking about indicators. We don't use indicators, but what a good idea. Let's have a look at the relative strength index, just out of interest. And oh, look at that, guys. Phew, it's getting close to the 90. So trading into the S&P at this point. Now, don't get me wrong. If something is really, really, really overbought or oversold, doesn't mean it can't stay there. Doesn't mean it can't stay there for an extended period of time, or for at least as long as you can stay liquid in your pocket if you trade into it. But this is not an area where I would like to be taking a long trade on the S&P 500. It's way, way overbought, way on the high side. And I do know that institutional traders like to short it when it gets to these kind of levels. So yeah, I'm seeing that correction, and I'm seeing that is going to probably, in all likelihood, play out a correction. How big it will be, we don't know, but this is definitely due. It's way, way up too high. And if you look at that, I know how pros think, and they're not just going to let that ride. So yeah, guys, if you're looking at long trades on the US 500, be careful. It's sucking everybody in. I can just see it. I can see everyone just getting sucked into these trades and ending up crying at the end of the day. Be very careful of it. Be very, very careful. Head and shoulders on the US CAD. Do you think we go down to the zone? Like I say, I actually moved my stop loss into profit last night, and I'm not even worried about it. But wow, okay, the head and shoulders hasn't played out, but goodness me, if it does play out, wow, it's a big one. Look, there's a shoulder, there's a big head, and there's a shoulder. If that shoulder plays out, for the shoulder to be valid, it has to play out. It has to go to the shoulder level and below. And if it does that, then we've got that projection down to the bottom here at 135.6. So yeah, hopefully my stop loss doesn't get taken out now in profit. That's fine. That actually looks quite good. Yeah. But the head and shoulders hasn't developed yet. So be wary of that. It has to develop. That always has to develop. Yeah. So, this is the problem. I've taken shorts on the UK 100, the Spain 35, and the Nikkei. And you're right. The US looks so strong. That kind of is plaguing me in the back of my mind. But as I just showed you now, if you look at the S&P 500, which is related to the US 100, the Tech 100, whatever, they are overbought so severely that I got to take the chance. I got to say, you know what? There's a good, strong possibility that something's going to turn here because I just know how the big money thinks. And yeah, they're just sucking everyone in. Everyone's just like, buy. And I've seen this before, by the way. Recently, was it a couple of years ago, that everyone was just, I think it was the last time Trump was in charge, actually. And everyone was just buying. The S&P 500 was just going up and going up and going up. And you couldn't go wrong. It was that type of trading where you could just buy into the market and you'd make a profit. Every time it comes back slightly, just buy into the market and you can make a profit. And then it came tumbling down. And it came tumbling down quite severely. I mean, it took quite a big knock. What was it? Must have been close on 30%. It took a big knock. And that's the problem. It sucks everyone in. And then when it does come down, those people that it's normally new traders that get sucked into it. So they've never seen the correction. They've never seen markets go the other way. And this is where it gets tricky, is because they haven't seen it, they don't understand it, so they don't believe it when it starts happening, and then it takes the money. It takes the money rather quickly. Yeah, it's because, I mean, the big guys pull their money, they pull the rug, and then it comes flying down. So you see Blue Mango writes here, Rob, with the expected rate cut on Thursday, should the indexes not rally if the expectation is correct? And this is the problem when you base your hat on the fundamentals, because yes, you are correct. In all likelihood, if they reduce the interest rates, we should get a knee-jerk reaction to the upside. But then you must ask yourself the question, what if they don't cut the rates? What happens then? What kind of reaction do you expect? They do nothing. That is going to be an insanely negative reaction, let me tell you. It's going to be far worse than the positive reaction that you expect from the good news. You see, the problem you have here, Blue Mango, just for interest's sake, is everyone is expecting the rate cut. So all the pricing and all the way that the market has moved is kind of baked in. In other words, the expectancy is there, so everyone's baked in for the expectancy. So the markets have moved in the direction of the expectancy. So if the expectancy happens, it might move a little bit further and sort of relax back and sit there, and it'll be okay. I doubt there'll be a huge, insane, ridiculous move. But now you have another problem, and that is if they don't do anything, that's when the insanity is going to set in, because all that expectancy that's baked in has got to be removed and taken out. So the opposite side of the coin is what plays in. Believe me, I've traded on the fundamentals before, and I know how this works, and I've done this before, and it always catches you out because you're expecting it to do that, and if it does the opposite, the severity is actually quite huge. I'm going to turn the volume off on my phone. The expectancy, I mean, it's the opposite is quite a huge move. So just be very, very wary of that opposite move to the expectant move, because it can cause an insane amount of pain. Right. So yes, you are right, but eyes open. How's it, Shane? Good to see you. I back tested your RSI breakout breakdown on weekly chart and got good results. I will try forward test it next in paper trading. You know, Tyrell, the RSI system works. It's a system that the big money, the institutional money, they live by it. You'll always find them using an RSI and what have you. What you got to be careful of if you only trade with the RSI is you need big pockets, because like I said to you now, things can remain overbought for an extended period of time. So a good example, as I said to you earlier, on this S&P 500, if you decide you want to use the relative strength index, I mean, this is seriously overbought. So I did show you, the counter trend trade on the RSI. You draw a trend in here. When it breaks the trend, it's going the other way, and so on. It's counter trending. But just remember, if you are trading in overbought situations and expecting it to come down, these can remain in these conditions for extended periods of time. And if you don't have the money to cover it, then you could end up with a problem. Okay, so yes, it will come down, but the guys with the big money use this because they know they can put it in there and they can hold it, and they're strong enough to hold it for an extended period of time and make the money over time. So just be careful of that. But it does work well. It works extremely well. I have used it in the past. The RSI is a great tool to use, and that's why I showed you guys the RSI, is because it is such a good tool to use. I just don't put it on my charts because I don't need to. But if I need to see something, if I want to, like we did now, we went and checked, what does the RSI look like? Because this thing just keeps going up. And there you go. What that tells me, if you read charts, you must read them like a book. And when I read a chart, what I'm reading into this is, wow, this is seriously overbought. What are the other human beings going to do in this scenario? And that's what's on the back of my mind. And then I start seeing the picture of, well, they're planning to drop interest rates on Thursday, and hang on a minute, what if they don't? And then you kind of look at this and think, this is almost like a picture playing into place. And I've seen this all before, where these pictures start playing themselves into place just before the event or something happens. So just be careful, just keep it in mind. Boom, boom, boom. Okay. Boom, boom. I hope the back test, the forward test works as well. Boom, boom. I've had mixed results so far this week, holding on. I'm just going through your messages, guys, just to see. You see, a 95% expectation of a rate cut. You know, that tells you that all the pricing is baked in. And if it goes wrong, it could be quite insane. And then it also could, even if they do give you the rate cut, there could be a scenario of, oh, we've got the rate cut now, and then they just start dumping the trades anyway because it's done. So don't expect too much from these. The Euro Great British Pound trade is still fighting. I must have another look at that. Sorry, Rob, in fibs we trust. Lol. I did a fib video, but it's not that popular, but okay. RSI works best on using oversold to buy assets that can go to zero. I'm a gold trader. Yeah, I like on the RSI, Nick, I like the overbought, because generally when things are overbought, they do tend to correct. So I think it works kind of well both ways. I've used it, like I say, in the past quite well. And it's not a bad thing to use. And obviously, if the big guys are using it, obviously they feel quite strong about it. Some of the best traders in the world use RSI. I just don't bother with it. I just use the price action, but sometimes I'll pick it up and put it on the chart just to see. And it just gives me a little bit of an ending to the story, or a little bit more information into the story that we're telling, because we're trying to read the story. Okay, Euro, United States dollar has broken to the upside. So the Euro's broken to the upside. Look at that big move going up. That's quite interesting. Euro, Great British Pound. Yep, there we go. She's going long. She's broken to the upside. Nice trade. That one actually looks quite good. You might want to wait for the retest. You might not, but it's broken past the prior high. Euro, Great British Pound is on its way up. It's moving hard. Off she goes. Great British Pound, Canadian dollar. I don't think it's going to be much different to the others. Let's just see. If I just look at this picture, of the Great British Pound, Canadian dollar, long. It looks long. It's going long, but you've got this level that it's got to get past at 188.22. There's a pincer top there that it's got to get past. That's a prior high for it to be confident. But as it stands at the moment, it's a long trade. It's in structure. It's still in structure. It is pretty high, but yeah, it's long. So you can, if you got a long trade on it, I wouldn't call it short just now, but that pincer top would have called it short for me, and it seems to be going against anyone who's gone short on it at the moment. Let's do the RSI thing again, because it's on topic at the moment, so we might as well have a bit of fun. And yeah, according to that, it should be going short. So according to the RSI, it should actually be going short now. So that might just be a blip where it's going back up. But keep an eye on it. It looks kind of bullish as it stands at the moment on price action. This looks kind of bullish. Okay. So Lunchalot's looking for a BTC long. I think you're on the right track with BTC. What if the Fed raises the rates to spite President Trump? Well, they haven't done it yet. They haven't raised the rates to spite Trump yet. But they might hold the rates to spite him, because they've been doing that all along. Have you noticed? He wanted them to drop the rates, and they held the rates, and they've held the rates, and they've held the rates. And what if they do it again? They can. David found the video. Great. I know that the regular guys will find the videos, but it hasn't done that great out there in the public. Maybe people aren't interested. I don't know. BTC on my fib is 50%. I didn't see that video. My latest video is the fib video. I think it's Monday's video. Yeah. US dollar is going the way of Zimbabwean dollar. Nick, I hope not. I do hope not. If the US dollar goes that far down, that could be pretty scary. Yeah, I'd rather it doesn't. But yeah, because then everything else is gonna. I'll tell you what. Probably be good news for the US more than anyone else. In all truths, but okay. I mean, it'll be sort of almost like faking it for currencies like the South African rand, as an example, because they'll think, oh, look how strong our currency is, look how well our economy is doing, yet the whole country is full of potholes, the railway doesn't work, the municipalities have run off with all the money, the buildings are burned down. Yet they're thinking, no, the country's doing well because the currency's strong. Meantime, the currency's not strong. The US dollar's collapsing. Oh, that's the insane, thing about it. But yeah, we'll see. We'll see what happens. Okay, the Great British Pound, Canadian dollar. I was actually more interested in Euro, Great British Pound, to be fair. Let's just go back to that. That's quite an interesting trade. That Euro, Great British Pound does seem to be on the up and on the move, moving that way. So that looks like quite a decent trade, to be fair. Aussie dollar, US dollar is also long. The lunch a lot. Fibonacci video was good. Thanks, FX. That's great. Long Euro, US dollar. Yep. The Euro, US dollar is long as well. Absolutely. Euro, US dollar. There you go. Euro, US dollar has broken to the upside. A fine long trade. So yeah, it's long. Okay. Where was I? I just wanted to show you guys something. Aussie dollar, US dollar, Aussie dollar, US dollar. That one. Okay, what we're calling on Aussie dollar, US dollar. That is long. Dum, 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 dum. Yeah, Aussie dollar, US dollar is long. Yeah, you're right. Okay. Look, it's broken to the upside. It's moving up. There she goes. That's Aussie dollar, US dollar. Long trade. And yeah, she's totally in structure, totally going that way. There is the question of this daily level here. A trend resistance, just keep that in mind. But it's moving to the upside and it's moving quite strong. So yeah, it looks good. Looks like a strong move. And back to Euro Great British Pound because I want that one in there. Why does it keep doing that? Good. Put that down there. And let's go and have a look at the news stuff. Let's go and have a look at a couple of things on the other side of interest. And I just wanted to look at these things because, people getting fired, Fed governors, tell you what, this is, there's a lot going on. So Senate confirms Trump picked Stefan Miran as Fed governor, which means, could get your interest rate cut soon. Nvidia is doing okay considering the news. Nvidia's chip finds a little favor with major firms. But what I wanted to look at here, here's Nvidia's price. It's nothing wrong there. It just keeps on going up. So, and it's got the golden cross. They keep trying to talk this down. They keep trying to produce bad news, but it just keeps on going up. So I don't see a problem for Nvidia as a whole. It seems to be pretty strong. Here's the dollar. The dollar that is, as Nick says, going to Zimbabwean levels. But yeah, it is hitting a base. It is hitting a base. It's holding on a base here. And what I am seeing, though, is this curvature. This curvature of, this is the 50-day moving average. This curvature is running along. I use them on my investments because you don't need much else. And it just tells you that that's on the downside at the moment, but it's curving around. And if it goes up, you're going to get the golden cross. It's going to start going up. That curve around tells me that it might start turning around and going back up soon. So the dollar might not go all the way down. It might actually start turning and going back up, and that changes everything on the other side. So keep an eye on that. Not to say that it can't fall off the bus, but that curvature is telling me that it kind of normally plays out, and it's going to go that way. So that's interesting. And the VIX is at these lows. There's volatility comes when things start going bad. When things are good and everybody's just buying, then the volatility is low. And the volatility is a good time. If you can buy the VIX, buy it, because there will be some volatility soon. That much I can assure you. So yeah, and Wall Street raises alarm on Trump ending quarterly earnings. Yeah, that too. I'm beginning to wonder about this dude and how he's running the country there, but okay. US stock futures climb as Senate confirms Trump Fed pick. So you see, the US futures are climbing because of his Fed pick of this dude, because now it's going to be his guy that's in power there, and they're going to do the thing. So, yeah, there's a lot of news surrounding that, and that has to take hold, I suppose. It's interesting. It's interesting. How will it affect the rest of the world? Don't know, but let's see. We'll see how that works out over time. Always interesting. Always interesting. Yeah. Politics, not my thing. Brent says short Aussie dollar, US dollar. You know, both of you could be right, and that's the unfortunate thing about trading. But, trading's 50-50. Charts don't predict the future. But, if I'm looking at Aussie dollar, US dollar, it trade what you see, it looks long. But, yeah, you if you want to counter trade it, you are looking short. But then I would just wait for it to give me a signal that it wants to go short before I trade it. So, for example, this Euro Great British Pound gave us a signal to go long. Aussie dollar, US dollar kind of needs to give us a signal to go short. But Shane could be right because it's hitting that trend resistance. That trend resistance is saying, hey, maybe we should go short now. We're a bit overbought, most likely. And I don't even need to pull up the RSI to look at that, I know. And at the end of the day, this has gone long, and it's gone very long. So buying it at this point, you see, you've got to use a little bit of common sense as well and say, gee, it's been going long for a really, really long time. Surely there's going to be some relief somewhere down the line. Now, there was some relief here, and it's going back up again, but there'll probably be some relief down to these mid-levels soon. And maybe it'll even come all the way back down to here. But I think what you can do, just to be on the safe side of a trade like this one, is maybe just draw that in just to give yourself a little bit of a picture. And you can even look at the upper side as well. Where's it going? You can draw another one in at the bottom. I mean, I know I'm drawing too many lines in here, but yeah, that's how we go. That's how we roll. And there we go. Draw that in and just see. Okay, that's how the Aussie dollar, US dollar is moving. At the moment, it's still bullish. It might actually go up, break through that, and go all the way to that. If you get a red candle breaking through that level, it's going short. As it stands at the moment, I wouldn't take a trade on it right now because I wouldn't be able to call this. I'm like looking at it thinking it could go short or it could go long. And that's where I stand with that one now. Whereas the Euro Great British Pound, I'm looking at that. I can call that. I can call that long at the moment, and we could go long on that. If you want to, you can go long on that. That looks pretty fair to me. But you might want to wait for a bit of a retest. I don't know. A retest on this would be quite simple, really, because all you have to do is draw the supply and demand thing in here. Just draw the demand level in at the bottom here. And there you go. The money might come back, take that, and go. So that would be your retest. That's actually, something you can do or something like that. But I'm drawing too many lines in here now, confusing the issue. We don't want to be doing that either. On the daily, we break the trend line to the upside. Yeah. Okay. Is the UK 100 still coming down? Yeah, that's okay. I need to check on my other accounts. Got some important trades. Yeah, that's down 0.67%, so that's in my favor. The Japan, that's 0.07%, so that's not really in my favor. The US 30 is up. That's fine because that's the S&P. I just want to see here. We were going to talk about Bitcoin, right? Bitcoin, somebody's looking for a long trade on Bitcoin. So let's have a look at Bitcoin quickly and just see what we've got here. My opinion is it's broken to the upside. It's bullish, and it's broken through levels that, it's broken past prior highs here, and it's moving to the upside. But for me to trade it right now is a bit of an issue because it's in the middle, Cyril. It's like, you don't want to trade these things when they're in the middle of nowhere. It's not brilliant. So what I would do is just, take the trend line in here again. Just do this again and just say, let's just see where this is. Let's just see what we've got. What have we got running here? And work it with that. It's always easier just to run it like this. And then you just get a clear picture. And for me, this is once again running in the bullish. And where's it going at the moment? Also, another difficult to say. But it's bullish. It's going up. If you're buying it, you can buy it now, but you're in the middle. It should reach the 120. I did call it to the 120. I would like to have purchased it further down, sort of down at these levels here. But I think if you're in it now, it'll go up to the 120 before it will start needing some more research as to what it's doing, where it's going, and how it's going. But yeah, it's bullish for now. It's going up, and you can kind of just go with the flow. It's trending. Trade with a trend. Trend is your friend. Nothing wrong with that. Like I say, there's 3 ways we trade. You all know the 3 ways we trade. Trend is your friend. You trade with a trend. We trade in the range. The range is good. And then we counter trade. And the counter trade, I like the counter trade because it gives you lots of room. And I also like breakout trades, which are often counter trades. But breakout trades can work with the trend, or they can also be counter trades. So it either breaks down, breaks up, and breakouts are good. I like breakouts because breakouts do run. A lot of people say they don't run as often as they should, and you only get a small percentage of breakout, but it depends what kind of breakout you get. If you get a breakout on a trend, they very often do work out. Counter trades also, they counter, if they're on a counter trend, they work out pretty well. The ones that tend to fail would be more on sort of support and resistance. More these, not that. You see, this type of trade will work out quite well, this counter trend. This will work out quite well because it's in a range and you've got the whole range. So you've got the bottom, you've got the top. You can clearly see that. And then it's broken that trend. So it's counter trending. So that's a nice breakout. But it's a breakout within a trend in a range. So you're trading in a range, but you're also trading a breakout on that. So that's a kind of a positive breakout. But if it breaks down, or breaks out of that level, those have a low success rate because they're breaking out of range levels. They're breaking out of resistance levels that have been around for a long time. It's been sitting in that level for such a long time. And now you're expecting it to break and go. And it tends not to do that. What it tends to do, like it breaks a level here, goes up, and then it tends to sit in that range for a while. Doesn't really, create a lamp pole formation when it breaks out of support and resistance as much. That's a lesser percentage. But when it breaks out of levels like this, they tend to run quite well. It breaks down from levels like this, they tend to run quite well. So those kind of breakouts are reasonably good. You've got to get a feel for which breakouts work and which breakouts are, neither here nor there. But, I like breakout trades when they're in the right place, and you get different types, like I say. So you just got to keep an eye on what you're looking at. There's a lot of things that go around it, that come around it. You've got to look at the outer realm, everything that goes around that trade, not just zone in on the one thing. We get too technical and we zone into one little thing and we say, because of that, we're going to trade that. But there's a whole range of things around it, maybe a whole fundamental issue around it. And you want to look at the big picture, and put everything into perspective. If I trade this, is it a good idea because of X, Y, and Z? It makes all the difference. Remember as well that patience is key. You don't need to trade every day. Patience is key. I mean, if you see a trade coming to you and it looks like it's working out, the trade, this is another breakdown trade, by the way. You see it's in a range and it's breaking down, and that's why we're taking the trade. But don't force trades. Don't search trades out. And that's what you find yourself doing if you're a day trader or if you're only trading one or two instruments. You start forcing trades. you've got to look at the bigger market and what's out there and find what orange peels are out there to trade and what have you, because then you can actually find trades. It's easier to find trades that way. FX Trader just said, "No, is the stock market in a huge bubble?" I don't want to be the one to call the bubble. I don't want to say we're in a huge bubble. If you look at the tech, there's kind of a tech bubble going on there. And if you look at the market, it does appear to be kind of bubbling up. I am concerned, like I say. I'm looking at this and I'm just seeing how people are just, especially people that aren't used to it going down. They just like expect it to just keep on going up. So it just goes up, goes up, goes up, just keeps on going up. People are just buying with expecting to see, if I buy it, it'll just keep on going up, because they've never seen it go down. That's my main concern. I've seen this too many times. This is not my first rodeo. And every time this happens, I get a similar feeling and I get the same picture. And soon after that, something happens. Something usually happens. Something changes and it just comes tumbling down. I watched Tony Trade's live stream yesterday, and I'm glad she also teaches 1 to 2% risk of your capital per trade. She goes 6% herself, but she is comfortable with it and is successful. So more power to her. Okay, that's great. It depends. Depends on your account, and it depends on the amount of trades you want to take on the account, and it's up to you. At the end of the day, the amount of risk you take doesn't matter, as long as you're making more on the wins and losing less on the losses. The idea of the risk management is very much to protect the account in all respects. And if there's a possibility that you could lose 10 trades in a row, depending on how successful you are in trading, then you've got to look at the possibility that you could lose your whole account if you're risking 10% per trade. But if you know that you win 5 out of 10 trades, then you can risk the 10%, because you're going to make more on your wins and lose less on your losses. So you're quite happy to go down that road, and you're going to make more money, so you can risk more money. It's very dependent on the trader and your threshold as well, your threshold for loss. So how much pain can you take, and how's your FOMO? How's your patience? You've got to be patient sometimes when you're sitting in a loss for a long time. You've got to be really patient. You've got to sit on that trade. Somebody mentioned to me today that my stop losses seem to be quite far. And, obviously tight stop losses are not good and they don't work for you. And I actually mentioned in the comment back to that gent who's a member, for me, tight stop losses and far stop losses is something I hate. Something I don't like the terminology, because it makes no sense to me. Because what you're telling me is, I'm going to put a tight stop loss on here. That means nothing to me. All it means is you're just guessing where you want to put the stop loss. You're just guessing, and you just don't want to put it too far away because you want to try and make a profit on the trade. That's all it means to me. A stop loss must be placed in an area where you know the trade's not going to work out. An invalidation, an area where you know, and I'm not going to touch that stop loss, it's a waste of my time. Put the stop loss in a safe place and then work out the size of your trade. It's as easy as it gets. You don't take the trade and then place the stop loss, because then you're fooling yourself. And also your stop losses are not evened out. They're not the same. Your stop losses have got to be the same. So never take the trade and then place the stop loss. Always place the stop loss and then take the trade. Because then you know how big your trade can be, because you know how much risk you're taking before you take the trade. It's easy. Not difficult, but people make it difficult. People get all complicated about it, and there's no point. Whenever a trader says to me, tight stop loss, fast stop loss, I know that then you are you're messing around because you don't have a proper plan. If you're saying tight and fast stop loss, you don't have a proper plan. You're just guessing where you want to put your stop loss and as close as possible so that I can make more money. Nick, Tory Trader, trend line trader, day trading ratio, 1-to-1 risk ratio, anyone? Learning to trade live podcast series. I looked into it. She's drawing that thing out for 3 days. Trend line trading is discretionary. The ratio of 1-to-1 is fine. FX, I'm a firm believer in it. There's nothing wrong with having a 1-to-1 risk ratio. I'm not staunch on your risk ratio has to be 2-to-1. Your risk ratio has to be 3-to-1. Your risk ratio has to be 1-to-1. No, I'm not into that. All I say to you guys is don't risk $250 for a $50 profit, or don't risk $1,000 for a $50 profit. You've got to make more on your wins. So if you have a 1-to-1 risk ratio, then of course we're 50-50. You could end on a 0, but there's nothing wrong with that. But if you do have a 1-to-1 risk to ratio, nothing wrong with taking that trade and then managing the trade. And if it gets to your profit level, maybe try to push it a bit and see if you can make a bit more. Put your stop loss up behind it. See if you can make a little bit more. There's nothing wrong with that. As I said to you guys before, most of my trading profit is made out of a small portion of my trades. And those small portion will be a couple of really big trades that'll make a big profit. And then there'll be a larger percentage than that of trades that have hit targets, which is normally more than the loss, so that is decent. And then there'll be a large portion of trades which are just a mishmash of small losses and small wins, which, they're negated. It doesn't really matter. And that's the way trading works. People think that they're going to get into trading, and they're going to win more trades than they lose, because that's the general psychology. It's a shock to find out that that's not how it works. And they get into trading and they find out that they're losing more trades than they're winning, and they're thinking, oh, what am I going to do now? How am I going to get out of this? And it takes a while for you to realize that you need to get away from that scenario and move into the scenario of thinking, wait a minute, I know I'm going to lose more trades than I win, but I can make big money on the wins and make small losses, and then I'll be okay. So it takes a while to get around that, and it takes a while to get around that thinking, because it is perhaps complicated for someone who's been taught that you're going to come into the market and you're going to have a win rate and you're going to make loads of money. Because the charts are going to win money for you somehow. I don't know how, but they're going to win money for you somehow. They got some predictive capability, which they never do. And then you get into trading believing that, and that's where it all goes pear-shaped normally. And yeah, Nick, I agree with you that trend trading is discretionary. Look, trend trading, that's why I trade three ways. That's why I don't just trend trade. Because if I only trend trade, then I'm restricting myself to only trend trading. I think I did see one of her videos when I was looking sometime, and I don't think she trend trades. I think she counter trend trades, actually. But it's okay. I don't know. I'm not an expert there. I haven't followed her channel or anything like that. But I do remember seeing one of her videos. I'm pretty sure that she counter trend trades as well. But anyway, pretty sure that she probably does something similar in the sense. But I just add a few extra things, I suppose. I like my trend trading. I agree with trend trading, but I also agree with breakouts. I also agree with counter trading, and I agree with trading in a range. So, it's just a bigger perspective, that's all. But then I'll also look at a chart and I'll see a pattern like a head and shoulders, and I'll trade that as well. I don't restrict myself to any one form of trading as such. I'll look at a price action chart, as you saw earlier. I'll take a look at this S&P 500, and I'll go, I'm not really sure here, and I'll actually add an RSI onto it, which, and I'm not restricting myself. I'm not saying I'll never do this. And then I'll look at it and say, ooh, look at that. And I can read the book and see what's going on here. And I can, it just gives me that little bit more information in my book. And it tells me what's going on. That's all, So don't restrict yourself. Don't restrict yourself to one type of trading because it's got a label or anything like that. Open your mind to other forms of systems that can help you with your trading. What you've got to keep kind of rigid is your strategy. Whichever way you trade, whichever method you use to take the trade, taking the trade is not the problem. And this is what I've been trying to say. It's not about getting into your trade and taking the trade. It's about managing the trade. And I think I even put that in the title today. No, I didn't. I said the biggest trading mistake you're making right now. But yeah, that is the biggest trading mistake you're making right now. It's not about getting into the trade. It's about managing that trade. It's about how you manage that trade. It's about how you strategize it. It's about managing the risk and making the profit. That's what the trade's about. You don't even need any lines to take a trade. You can take any trade you like, and as long as you manage it, you might make something, you might not. And it's not about managing one trade. It's about managing all the trades, because you're going to put all the trades together. Some of them are going to lose, some of them are going to win. It's about trying to make more on the wins, lose less on the losses. That's not just about managing one trade. It's about managing all the trades together and having a bigger picture at the end of the day. So, yeah, if someone trend trades, they probably do, in all likelihood, probably look at other ways of trading as well, or trade with other systems as well. But no, I haven't watched that video, so I couldn't possibly tell you what the policy is there or anything. But I do believe that that people have their ways, and it works for them, and it works well. Everybody's got their system. Like I always say, every system works. Is trading 38% profitable. So 38% of your trades are winning. It's a good figure. Nothing wrong. Coral, yes, I am saying your stop loss always has to be the same on any one account. It doesn't have to be the same across all your accounts. But if you have an account and you choose your account size, whatever size that account is, okay, this is a $25,000 account. So the first thing you have to do is keep the account size the same. Don't change it. So if you have a $100,000 account, keep it at $100,000. If you have a $25,000 account, keep it at $25,000. Doesn't matter if it changes or moves around or whatever. I do normally say to people, if you do make a profit, get it out of there. Don't leave it in a broker's account, because you might wake up on Monday morning and they're waving at you and saying, so long, and all the fish driving away to the beach or whatever. Don't. Just be careful of that. They're not banks. They're brokers, okay? And so then, but that's not the reason you keep your account size the same. The main reason you keep your account size the same is so that you can manage the account according to that size. And then you can keep the risk the same on every single trade. And then if you decide, well, I'd actually much rather trade with much more money, then you can change the size of the account. In other words, you can decide, the account's rolled up to 30,000 and I want it to be a $30,000 account. So this is now a $30,000 account. So I start risking $300 per trade instead of $250. It doesn't have to be exact. So if you're risking $250 per trade, doesn't mean every trade has to be $250. It means it can be $260, $240, $230, $270, just in that range, around that area, because the idea is to try on your profits, to try and make $300, $400, $500 on the profits in that range, so that you're making more on the profits, losing less on the losses. Now, if you change the risk amount on every single trade, let's say you risk $250 on this one, you risk $500 on that one, you risk $100 on that one. What inevitably happens is even though you thought the one you risked $500 on was your best trade on earth because you looked at it and said, I can't lose this. This is the best trade I've ever seen. And you're in there, $500 risk. Right, I'm in. I'm going to make so much money on this trade. That's the one you're going to lose on. Definitely, that's the one you're going to lose on. And the one that you said, ooh, I don't want to take that trade, but I'll take it anyway because it looks okay. I'll risk $100 here. Guess what? That's the one you're going to win on. That's the one you're going to make the money on. And you're going to make $200 and you've lost $500 on the other trade. So when you get to the end of the week, you look at your trades and you think, oh, wait a minute, why am I losing? See, that's the problem. That's why you need to keep your risk the same. If you keep the risk the same, then you have a baseline that you're working from. And you know what your baseline is. Your baseline might be 1%, or in, as you said, is it Tori, her trades 6%, or in other people's 2%. Many people use 2%. And at the end, you can say, well, that's my risk on my account. That's it. End of story. And I lost so many trades and I won so many trades. And you can either make a profit or a loss, and you can work it out accordingly. But at least you know all your risks are the same, and you have a balance, and you know what that balance is, and you know where you stand with your trading. That's nothing complicated about that. And you have a business plan, and you have a proper strategy as to how much money you're making or how much money you're losing on any given trade. Amazing, isn't it? But yeah, look, guys, I'm no genius. It took me years to work that out. It took me years to work that out. I used to think that charts were going to make me a profit. I used to think that charts were going to be the profitable thing. Charts were going to be the only thing that was going to make me a profit, man. Nothing else. I thought that charts predicted the future, and I would take a chart and I would have a win rate and I would make a profit with a chart. And it didn't matter. And I was the biggest culprit on earth for choosing better trades with bigger risk and more horrible trades with lesser risk and just trading willy-nilly. And if somebody walked up to me at some stage in my trading career and said, you know, how much did you make? I wouldn't know. No idea. I'd just be like trading and oh yeah, it looks like it's in a green. It looks okay. I was the worst one for that. I was the worst. And somewhere down the line, I mean, all these older men were telling me, hey, Rob, you need to like have a business plan. You need to control, and it's time in the market, not timing the market, and all these stories. And I used to think they were all insane. And then I figured out I was the insane one, and then I worked it out and kind of came to the realization that I need to put things in perspective, and I worked out the whole business plan, and I worked out the whole situation based on a lot of other people's past history. By the way, I mean, I'm not a genius. I didn't just work this out from scratch. I took a lot of information from everyone else and then put it all together, obviously. Just a trader, I'm not some magic financial wizard or anything like that. I never went to university to study trading or anything like that. No. Story is a trend line break trader. Yeah, so it's a breakout trader, trend out break. So, if you take this trade, this is probably it. It's in trend, it breaks trend. So it's counter trading. So it's a counter trade. That's the three ways we trade. We trade with the trend, we trade in a range, and we counter trade. And this is a counter trade. So it can either be a breakdown out of the support, or it can be a breakdown off the trend support. This is a breakdown off the trend support. That's a breakout trade. It's broken trend. So you're trading against that initial trend. Pretty much it. It's straightforward stuff. It's not complicated. It's just, the way people trade. We're in a 3-day challenge at the moment. Okay, that's great. That's always good. Somebody's doing a challenge. What's the challenge? Sorry, really nice. trading platinum futures, platinum, okay. Interesting, Nick, that as I said to you guys before, the commodities are very cyclical. I don't like trading platinum and palladium and stuff like that because of liquidity. I'm not big on the liquidity. So, yeah, I prefer the gold and whatnot if I'm going to trade a commodity or oil or whatever. I'm also checking out ICT, so getting into fair value, order blocks, breaking block, etc. Paper trading to see how that goes. So ICT was a big fad. I'm not going to talk anyone down because every single system works. So don't get me wrong here. I'm not talking them down. All I'm saying to you is be cautious, because all ICT was a big fad that came about and everybody got involved in it. And it's a bit like at the moment the fad is ORB, opening range breakout thing, whatever. It's a big fad at the moment. So ICT was a big fad for a long time, and people were involved in it and whatnot. And basically what they did is they took price action and added a few extra things into it, fair value gaps and this, that, and the other. So yeah, it's pretty much what you're doing here. You're drawing a line in the sand and you're taking a long or a short. It's a 50-50 trade the same way. It's not going to change anything for you. It's not going to make it better. Just don't overcomplicate it, because it does get overcomplicated. This is all very much based on the original Wyckoff strategy. The original Wyckoff was quite complicated, even for me. Well, when I say even for me, especially for me. I'm not the brightest spark out there that can sit, work out Wyckoff and all the rest of it. It's too much. I was like, oh, this is too complicated, man. This is insane. And so then you just take that and you just simplify it down, and it becomes just a lot easier. So it kind of goes, and then all ICT has done, for example, in my opinion, is they've taken a simple system like this and made it more complicated. That's all. And added more complications to it, which you don't really need. If you go into an institutional trader, if you went onto Wall Street and you found a few of these traders there, okay, that work there, and you look at what they're using, they strip their charts off as well, and they don't have much going on. And you'll find that 9 out of 10 of them are using price action and RSI and probably nothing else. Okay, look, I stand to be corrected, but from what I've seen, and from those I've spoken to, and from those I've heard, that's what they trade. It's very, very basic, and maybe a bit of volumes, obviously some volume. But other than that, they're searching liquidity, and yeah, no, they're not using all these fancy ICT systems or Wyckoffs or anything. They're just using basic stuff. There are some technical analysts out there that are geniuses, that are absolutely amazing, do amazing stuff. But if you keep it simple, you'll get there. You don't need to be a genius to do this. You don't need to have a university degree to do this. It's really, if you keep it simple, it's basic stuff. Don't start overcomplicating things. Don't start getting too involved in all these technical, complicated extra things. But yeah, look, Tywald, if you learn a bit of ICT, it'll probably help you with this as well. It works along similar lines. So yeah, figure out a bit of supply and demand in between, what have you. But watch out for putting too much in place and too many things, because you're looking to take a trade at the end of the day and manage it. And to do that, you do need to reduce a little bit of trading against yourself, because you're going to end up trading against yourself. That's the big problem. You end up trading against you because you've got so much going on the chart. Okay, risk of ruin is high with 6%. It's almost zero with 1%. With 50% win rate, there is a 95% chance of losing 5 in a row. I think ICT is the same as SNC. Nick, how's the math on that? ICT makes things way more complicated than need to be, in my opinion. Big Chip, how's it? Yeah, no, that's what I'm trying to say to you, is don't try and take this system and turn it into some monster. Don't do that. Just keep it as simple as you can. Enjoy the lunch, Tywald. Have one on me. I love it. Yeah, absolutely. Are you taking Sir lunch a lot with you? So lunch a lot's providing the lunch. What you talking about? And from greetings from Black Forest, Germany. Learning a lot here. Thank you for that. Greetings. Hey, welcome, man. Good to see you on board. Lovely stuff. Rick, good morning from the USA. Usually from Baltimore City, but Ocean City this morning. Lovely, lovely. Hopefully the weather's good. Dave, good morning, Rob from Wisconsin. It's 5 a.m. Still dark outside, but I'm able to catch you live this morning. How's it, Dave? Good to see you here at 5 a.m. in the morning. Always good. Great stuff. At least you guys can be on board with me at 5 a.m. in the morning. And look, your market hasn't opened yet, so you're good. But I do try and put the Thursday one a little bit later so you don't have to get up in the middle of the night. No, don't ask me to speak Deutsch. Not good. Ben, Sir Lunchnot wants to know what's for lunch today. Perfect. Yeah. Yeah, something with a beer. Be good. Hey. Having trouble translating that. No. It's already something like there. My German's not that good. Sorry, guys. I'm trying to translate it, but yeah. Okay. Yeah. Let's just see. Where are we? UK 100. This one's working in our favor as well. It's going the right way. Look at that, breaking down. Interestingly enough, these trades on this platform, if I look at them all, they're all actually, well, yeah, actually, they're all trend breakout trades. Yeah, that's a trend breakout. That's a trend breakout. Well, that probably was a trend breakout. That was a trend breakout. Essentially interesting. That seems to be working at the moment. Okay. The in-trend trades, none here. Even on my other platform, the Spain was off resistance, off top resistance, and the Jap as well. So those are off top resistance. Okay. Those are off resistance at the top. Yeah. All right. I know those are not trend breakouts, but on this platform, they're all trend breakouts. Okay. I found multi-chart analysis of the candlesticks much better than ICT. Yeah, look, there's been a lot of controversy around the ICT system and those guys and what it's all about. I don't want to go into that too much. It's not my thing, but yeah, don't get overcomplicated. Don't go mad. And, there's a lot of systems out there you can go mad with. I can make a video for you tomorrow on the Ichimoku systems and, the 26-day period in front of the price and the cloud and all the rest of it, and really baffle your brains if you want to. But I don't want to go there because it's just going to confuse you. And there's going to be a nice new shiny toy in front of you. You're going to look at it and say, "Ooh, look at that! It can make me money." But I've used the system in the past, tried it. It's very lagging, and you've got to be insanely patient to work with it. It's easy to use once you know how to use it, but wow, patience is key on that thing. And no, it didn't really work out for me. I didn't enjoy using it too much, so I moved on. I tried it for a short period, way back when, because it was the thing, and no, but people still use it. People still use that Ichimoku, and it's quite complicated, quite a thing, but it's not difficult to use. So yeah, ICT is based on this. It's based on price action as such, but they've added a whole bunch of strange things in there, like fair value gaps and all that. Great, if it whatever floats your boat. Yeah, there's so many different ways that you can trade, but if you understand that the market is a 50-50 game, if you understand that you're not going to make the money from the charts, if you understand that you just got to keep your risk the same on every trade, and you need a strategy to make the money, then you can apply things slightly differently. So, what I always say to someone is, it doesn't matter how much money I make, or how much money, what is it, Tori makes, or how much money Tom makes, or whatever. It doesn't matter. It's not important. What's important is, does the system and the strategy work for you? Are you able to apply it? And will you be able to get it to a point where it actually can do something in your life? And that's the important part. The important part, because you see, it doesn't matter who trades the system. If we all trade exactly the same system, there's a good chance that all of us are not going to be comfortable with it, and there's a good chance that all of us are not going to work well with that system. So you might want to tweak that slightly, and you might want to make it work for you. The strategy, on the other hand, should work for everyone. It shouldn't be that complicated, but if you want to tweak the strategy, obviously you can. And it's not difficult to tweak the strategy. That's easy. You can say, well, I don't want to risk 1%. I want to risk 2%. I don't want that size account. I want that size account. I want to make this amount. I want to trade 1.2 to 1 or whatever. You can tweak it in those ways. But the general basis of the strategy should remain the same, and that is keep your risk the same. And then work out how you can make more on the profit. The systems, you can use any system you want in the market that suits you. If you want to use the moving average crossover, that's fine. If you want to use the MACD, that's fine. If you want to use the RSI, that's fine. If you want to use no indicators and price action, that's fine. If you want to use support and resistance, that's fine. They all work. Every single one of them will give you the same result at the end of the day. They'll give you the opportunity to take a trade. They'll give you the opportunity to manage the risk, and they'll give you the opportunity to manage the trade. Every single system will give you that opportunity. And whichever one you feel most comfortable with is the one you should be working with. The big thing here is to get the strategy right and the business plan right. And even if you don't use my business plan that I put forward to you guys here in strategy, and you change it completely and make your own, if you feel it's going to work for you, that's what you need. You need to separate the charting from the money making and from the account and try and work it around that basis. Because no two traders are going to trade the same on any one system or chart. Doesn't matter what. We could, even if we were like really close to each other, we would be at least split seconds apart on the time we take the trade, the time we sell the trade, how our feelings are when we're in a loss or a win, when we get out of a trade, how we get out of a trade. We're all going to have a different approach to it psychologically, because the one big thing, what's the biggest thing in the stock market or Forex trading or crypto trading or any kind of trading? What's the biggest obstacle in trading? The biggest obstacle in trading for all of you and me is fear. Fear is your biggest obstacle. And the only time you encounter fear is when you got it on the line. Okay, so the difference is, if a person with $1 million trades $1,000 and they're losing $500, they'll be like, I'm losing $500. There'll be a level of concern. There'll be a level of fear in that mind. But a person who only has $1,000 is losing $500. That level of fear, that level of fear is going to be insanely higher than the guy with $1 million, because you've just lost half your money. It's a completely different scenario to the guy with $1 million. So the fear levels are related to the loss or even to the gain. Keep that in mind. If you're winning, if you've got $1 million in the bank and you're winning a couple of $100, you're like, I'm winning a couple of $100. But if you've only got $1,000 in the bank and you're winning a couple of $100, that suddenly becomes a lot of money to you. And then your FOMO kicks in and your fear levels kick in. I don't want to lose that $200 because I can now add it to my portfolio. It's a huge difference, huge. So fear is your biggest obstacle in trading. Trend line break works very well. I used to trade this strategy years ago. Yeah, I traded Ichimoku for a while, and I found it quite a lot of fun, actually, and quite interesting, but I ran out of patience. Yeah, I believe Germany's got its problems. Boom, 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 boom. Lot, Euro, Great British Brown, long, even the best boat can sink. Oh, iceberg, what else? A large part, which time frame? Okay, Ben, RSI plus trend lines plus support and resistance works for me. I've tried dollar cost averaging, but fails most times, so I focus more on quality trades. I will talk about dollar cost averaging a little bit. Please check silver chart. Do you think there's a long above 42.734? Sorry, Sir Lunch, I don't see it. That isn't right. Sorry. Hi, Rob. I feel I'm going to give up on the 1 to 2 rate restraint. Give me your strength. As I say, risk to reward doesn't have to be exactly 2 to 1, guys. It just make more on your wins than you losing on your losses. As long as you make more, doesn't matter. Okay, what's with the US dollars today? Oh, it's losing, but we'll talk about that now. Somebody asked me something here. Please check silver. I just want to check the silver quickly. Silver, and what were you asking me? Silver 42.734. It's, you know what, silver's silver's too high. Be careful. Just a little bit. No, there's nothing here. There's nothing here. I'm not seeing it. There's your silver. It's in the middle, Cyril. Not much going on there. You know what you can do is what we were doing earlier, because there's nothing to go on here. You look at the RSI. Oh no! Oh no! Don't buy. Don't buy. Look where that is. It's way overbought. It's probably going to come down. It's probably going to correct. Okay, don't do it. It's way too high. Way too overbought. I'd say let it rest. Let it come down to 42,000, then look again, or maybe 41, then look again. Let it come down a bit before you get into that. I think that's going to be a bit of an issue. But don't go into that. No. Silver, wait. Okay. What's going on with the United States dollar, South African rand? You know, I'll tell you what's going on with the United States dollar, South African rand. Why did I take this trade? You all know why I took this trade. It's because I fundamentally believe that the South African rand is rubbish and it should go to zero. I mean, it's crap. It's the worst currency. You know, I look at the country and I look at what's happening and I look at the potholes and I look at, you know, everything that's happening and the money that's gone, and there's no way that this currency can be doing well. That's why I've got this trade. And, you know, technically it was also, it played out. So it looked technically like it was going to go well, but it's going against me. And that's what happens in trading, because you get married to a trade, you believe in it, and you think, well, this can't go wrong. This is why I said to you, keep the risk the same on every single trade. Because this is the type of trade that I would have risked double on if I could. You know, I would have gone more. And the other trades I would have gone less. And those are the ones that are winning, and this is the one that's losing. So that's why the risk is the same. The risk is the same as all the other trades. So whatever happens, I've risked the same amount, which is the right way to do it. And it's going against me. It's going against me. So be it. That's how it works. No big deal on this thing. But I mean, okay, so I'm looking at it and thinking, okay, but fundamentally, I believed it would go the other way. But what caught me out? What caught me out with this? The US dollar is getting weaker. The US dollar is getting weaker, which is causing this to happen. That's what's caught me out. There's nothing to do with the South African rand. So you see, my mentality, my psyche was the South African rand should be weak. But my psyche was not thinking, but the US dollar might also weaken. My psyche wasn't going there. And that's what's happened here. is the mighty US dollars getting weaker. And that's caused this scenario. Now, why haven't I traded out of it yet? Because it's losing and it's not looking great. Well, because I don't believe the US dollar is going to keep on weakening, because I think it looks like it wants to turn around and go back up when I look at the Dixie. So I'm kind of thinking, well, leave it. And if it takes out the stop loss, then it takes out the stop loss. Okay. I had a plan, I'm staying with a plan. And that's how it is. Yeah. So that's what's happening with that thing. Just so you know. Okay. I'm in it forever. If the South African rand goes below 17, I will be surprised. But what's keeping it in this range while the US dollar is weakening is the mere fact that the rand isn't strong, so it does keep it down there. The big problem for the rand is if the US dollar decides to strengthen to its normality, the rand is going to go to some insanely high levels and dangerous levels, which is not good for the country and for the unemployment and for the people living within the country. But yeah, you know, that's how it goes. That's how trading goes. Okay. Dum 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 dum. That's why hello, a real Ben. Ben's still got a real job. Okay, cool. FOMC today, so it could be a wild ride. Big chips in the FOMC today, and that will cause a wild ride. It always does. And then we just need to watch the stop losses during a wild ride. Oh gosh. Okay. Gold is always crazy. I only trade gold, hard to master. Yes, as a day trader, I was only trade DAX and US 500. If you're a day trader trading on the 5-minute charts and the 1-minute charts, it's probably best to choose maybe 3-4 instruments and only trade on those, because it's difficult to manage everything. But day trading, yeah. 7 winners and 2 losers today. But that's FX, that's like scalping. I mean, if you're day trading, that's how it's going to go, you know. It's very much quick in and out, in and out, in and out. The trouble with that, what I hate about day trading, as I've always said, is what I hate most about day trading is I'll win 7 and, you know, they'll all be small wins, and then that 8th or 9th one will take out all those wins, and it's demoralizing. You just look at it and think, why did I waste all that time? Short on the US dollar ZAR. Ooh, you're brave, man. You're brave to short against the ZAR, that's for sure. Okay, I still lunch. I only trade DAX, Brent, and gold. DAX, Brent, and gold. Good ones. Rod, I was looking at the GBP AUD for a buy, and then I put yours I and run away. Okay, there you go, Rod. You see, the only trouble with that is you don't want to be trading against yourself. But yes, the RSI is a very, very good indicator of where the world is going, and it helps you read it a bit like a book, and it gives you more information. Across this year, 12 prop challenges with gambling. I'm starting 2026 from the beginning with a 100K account. Lessons learned. Keep your head up. Well, lessons learned. Keep your head up. Hold on, I want to 15 money. 1 to 15 minute and make money. Yeah, okay. Happy to do a challenge. Perhaps we need to do a challenge sometime, a 15-minute or something. But yeah, everybody here is a swing trader, so let's just keep it at that. Yeah. I have done a lot of trading on the 5 minutes and the 1 minutes before, but then I end up sitting there the whole day trading on charts. My eyes go square, and the reason I don't do it anymore, and not to be funny, I just don't need to. Okay, I don't need to, and so I don't. That's why I swing trade as well. It's I'm still addicted to trading, but I don't need to sit and watch the charts all day, and I've got other things that I want to do. And, you know, whereas with the 5 minute and the 1 minute and the 15-minute trading, you're sitting there, you're watching charts all the time. That's actually where I got into Ichimoku as well, is with the 5 minute trading and the 1 minute trading and that sort of stuff. But the thing is, you end up dedicating your life to a computer monitor and chart, and I don't want to do that again. And as I say, I don't need to. So yeah, I stick with the higher time frames. We can play around and have a game on a live session or something like we did before. I actually tried to show you guys how you can lose on the 5 minute charts on that one live show, and it was a demo, and we won. But anyway, that's how it goes. Charts can't predict the future. Yeah. Yeah, the transition. Okay, the transition you need to take. Here's an idea for you, Shane. Do it on a demo just for fun. Okay, so don't use your real money. Do it on a demo just for fun, because you're trading on the 5 minute and the 1 minute. But pick 20 trades. Okay, just pick 20 trades, and you know. So this is how I live with my cash accounts, right? Rather than my funded. You can't do it on funded accounts like this, because it'll wipe your accounts out, probably. But if you take a large amount of trades, take 10 or 20 trades, right? And then just go, okay, I want to buy this, I want to sell that, but buy them and sell them when they come up at the right time. And try and have 10 trades on the go on an account, on swing trading, on 4-hour trading, and see how that goes. And then check how much you need to risk to make enough money for yourself, and work with it according to that. Try it out. Give it a test. Forward testing, as they call it. And then try and get used to it that way. You see, the more trades you got, the more chance you got of making or losing some money when it comes to swings. But the point of swing trading is I can take the trade and I don't have to sit here and watch it at all. I'm not sitting here watching the trade thinking, ooh, any minute now, any minute now. You know, I leave it and then I come back and check what it's doing. And I mean, I've been in this United States dollar, South African rand. Who was it asking me what's happening with the South African rand? I've been in this trade for a couple of weeks now. And it's insane for me to be in a trade that long. It doesn't bother me. It's there. It's going on. And it's not a concern to me at all. Now I'm sitting here talking to you guys on a live show, showing you how to trade on these particular instruments here, bearing in mind that on my cash account, I have many other trades. And for example, one of them is, for example, the Spain 35. So I'm looking here, that looks good to me because I know I'm short on it. The Jap 225, I know I've got a Nikkei trade on. And there's a couple of others as well. There's a Euro US dollar. There's a couple of others as well that are going on there. I can't remember them all. But there's a number of trades going on my on my other accounts that I'm not looking at while I'm sitting here talking to you. I'm busy talking to you guys. Could be looking at those trades and watching them. I don't need to watch them. I don't need to sit and watch them. There's a take profit in place. There's a stop loss in place. I need to move my trailing stops from time to time when it goes into profit and go and make sure that it's doing okay. You know, that's how it goes. And then I've got my investment accounts. My investments are running and they're on their own and they're doing their thing. And then I hear in the news that Nvidia's got this problem and that problem with China, and then I go and check and I say, oh, it's doing insanely well, so I'm not going to bother with it. Crazy. I saw my Coke share. I haven't looked at it for months, and I looked at it today, and it's come back a bit. But yeah, that's one of those things. Probably had some bad results. That's one of those things. We keep it. You know, it's not going anywhere. Okay. In the beginning, can't sleep with open trades. You know, that is the difficult part. One of the most difficult parts is if you can't sleep with open trades, you may have risked too much. So just keep that in mind. If you've got too much risk on a trade and you can't sleep, or if you go out and you keep looking at your mobile phone, there's a possibility that you've got too much risk on the go. So just find your balance on that. Now you don't even care. Yeah, exactly. So now you found that balance. Top-down analysis. The top-down analysis is something that I have showed you guys before. I do use top-down analysis. It's very important. It's actually more important for someone like Shane who tries to trade the 5 minutes and the 15 minutes, because the way I traded when I trade day trading is I would look at the day, the weekly, the 4 hour and say, which way is the market moving? And then I would only take trades in that direction on that instrument. Whereas with swing trading, I'm not that married to it. But if I do look at the daily, and it does look like, I mean, we take our levels from the daily on a regular basis for the 4 hour trades. So I'll go to the daily and I'll look at the daily and I'll take my support and resistance. I'll see where the levels are. And then I'll take my swing trading based on that. But if there is a bullish tinge to the entire market, doesn't mean I won't, counter trade or go short on a 4 hour. But on the 5 minutes, I will only follow the top down analysis. Make day trading work, you need at least 10 to 20 accounts. That's true. Solange, I've stopped using her top-down analysis as the time frame you traded on it is sufficient. Trade the I don't care size. Look, top-down analysis, the way I use it, Shane, is if I look at the higher time frame and it's bullish, okay? If I'm trading on the 5 minute, I'm not going to trade bearish at all. I'm not going to take short trades at all. If I take long trades, I've got a higher percentage chance of it going up. That's why I do that. But on the 4 hour, it doesn't matter that much, the top-down analysis, as much as the 5 minute. But the top-down analysis is what I do is I go to the day chart, get levels. I know where my levels are. I know if the market's moving up and down. And it does play into my psyche when I'm taking the trades on the 4 hour, and it does work. So we use top-down analysis in its own way. Okay. There's nothing wrong with top-down analysis. It's a good thing. Please explain your stop loss on US dollar ZAR. I'm also looking weekly and monthly. Can be bullish on the higher time frames, but retrace on the lower time frames. I agree with you, totally. It can be bullish on the higher time frames and retrace on the lower time frames. So you can get trades on the lower time frames. But what I look at is the overall situation, the overall pressure. So if the overall move is to the upside, then your chances, if you take an upside move, is probably going to be better than if you take a downside move. That's all. But the downside move will still work if you're on the lower time frame. Yeah, you see, this is, the dollar cost averaging scenario, the $150,000 drawdown, hold it till profitable. It's the same as the dollar cost averaging scenario where that just doesn't work. The more you dollar cost average, the more you're going to lose. And if you try a dollar cost averaging system where you, instead of risking $250 per trade, you risk $25 because you want to build it up, then all the profitable ones are going to work out immediately and make you $25, and all the losing ones are going to be the ones you've dollar cost averaged down to $1,000. So dollar cost averaging just does not work. And then holding a trade that's $150,000 in loss. Wow, okay, that's quite a lot. If you're holding a trade like that and you're holding it for a long time, you need deep pockets. You need really deep pockets. And you have to be really patient, and you can find yourself holding it for an insanely long time. Now, what I find is people who hold trades that long, I agree, you do end up in trouble somewhere down the line, and especially when a crash comes along on a Friday afternoon. So let's say it's 2008 and the crash is coming along. The Lehman Brothers Bank is closed and it's Friday afternoon and your trade's $150,000 down. Now you have a decision to make. Are you going to hold on to it or are you going to dump it? And I would say dump it because you're going to be in big trouble on Monday morning. And that's when these accounts get wiped out. Also, what I find is if you're holding a heavy loss, which some people have got deep enough pockets to do so, eventually that heavy loss catches up to you. I've done that in the past. I've made that mistake where I was holding a heavy loss and the loss was getting heavier and heavier. And I was like, it's okay. It's okay. It's okay. It's okay. It's okay. It's okay. It's not okay. It's not okay. Because you get to that point. Everyone gets to that point where it's not okay. All right. And it gets too much, too soon, too high. And you think, everyone gets to that point where you got to call it. You got to say, you know what? It's time. And you get out. You let it go for an insane loss, which is why we have this strategy now, by the way. To get out for this insane loss, do you know what happens a week later or a day later? It goes in your favor. And you just, that is so demoralizing. That's like the worst thing on earth because you just couldn't hold that little bit longer and it turns and it goes. So my question to someone who's 150 grand down and they're able to hold it and it comes back and it makes a profit for them, good for them, lucky. But would you have still been holding it at $200,000? Would you have still been holding it at $250,000? That's my question to that person. And yeah, that's a question only they can answer. But yeah, that's the problem with not adhering to stop losses and breaking the rules, because those are the rules. And if you break the rules, we've all done it. I've done it, and it's painful. You don't sleep at night. You don't sleep because that's a big loss lying there. You can't take it. And as I say in the beginning, you go, it's okay, and okay, and still okay. No, it's not okay. And it starts becoming like, no, this is trouble. There's big trouble here. No, believe me, guys, that's not the way to go. But yeah, Maria, please explain your stop loss on US dollar ZAR. My stop loss on US dollar ZAR is very, very easily explained. This is not going to take me a long time to explain. Well, I could make it take a long time, but I'm not going to. My stop loss on US dollar ZAR is in an invalidation area. Okay. What is an invalidation area? An area where it shouldn't get to. Okay. If the price gets to 1710 on the US dollar ZAR, and I look back on this chart, then clearly this is on its way down. And clearly this trade is no longer valid. No longer valid if it gets to that level. Because it's below that prior low, way below that prior low, and it's telling me that it's going. So, also, fundamentally, the South African Rand seldom gets past 17 or 1710. It has been in the 16s, but a long time ago. So that's why my stop loss is at 1710, because it's invalidation area. That's it. The stop loss was chosen before the trade. So we take the stop loss, we work out the size of the trade, we work out the reward. It can go way past 1860 if things change. So I'm not concerned about that. So that's the target. So the stop loss is simply in an invalidation area. It's in an area far enough away from the lower low. If they come looking for liquidity, if they come looking for money to take to go back up, they're not going to come all the way down there. It's too far away. Nobody wants to sell it down there. The price is too low. So that's why my stop loss is where it is on the United States dollar, South African Rand. That's why my stop loss on everything is where it is. My stop loss on the UK 100 is at 9,400. Why is it there? because it's above that prior high. It's above the double top. It's above the resistance level on the daily and the 4 hour. And if the price gets there, what is my trade? My trade is invalid because it's going up. It's broken out. It's broken to the upside. And also, it's taken all that liquidity all the way up to there. That means it's just going to fly. So that's why my stop loss is there, not for any other reason. Why didn't I put my stop loss here? Because if I put my stop loss here, it's right in the middle of all the liquidity. It's right in the middle of all the orders, and it would get taken out rather easily. In fact, where my stop loss is at the moment on the Canadian dollar is lunatic, because I've taken my stop loss down from where it was up here. My stop loss was all the way up there. And I have now moved it all the way down into profit. So there's no stop loss anymore. There's only profit. But it is close by and can get taken out quite easily. But I'm not concerned by that at all. You see there's no red anymore on the stop loss. There's only green as far as my stop loss goes on that lunatic trade. Okay, there you go. That explains stop loss for you. You can't dollar cost average on anything except a profit. If you're profiting, then you can dollar cost average, you can add, you can make the trade bigger, what have you. But if you're going into a loss, do not dollar cost average. You're changing the size of your trade, and you're marrying the trade, and it's just getting worse. If you want to marry a trade, I married this trade, United States dollar, South African rand, but I haven't dollar cost averaged. I haven't added to the trade. I haven't done anything with the trade. I've just left it. If it works, it works. If it doesn't work, it doesn't work. That's how I'm married to it. That's fine. But if you get married to a trade where you take the stop loss away and you let it run past the stop loss and you add to the trade and you dollar cost average it, then you're looking for trouble. And you are looking for big trouble. And that's just your psychology and your mentality that you need to get around. Are we long on gold? Sorry, I've lost track. You would be long on gold, but I'm not going long on it now. Long on gold because it's broken past the prior high, it's going up, and it's a long trade. But it's seriously overbought, and I would be cautious buying it long now. But yes, you would be long on gold at the moment. If you're long on gold, stay long on gold. It's fine. If you want to get in, I think it's a bit late. Okay, but it's breaking out, and you could take that chance. But it's breaking out. I've done that many times in the past. Nick, do you take any partial profits? I've done that many times in the past. I've done that, and you know what causes that, Nick, in my opinion, is partial profits are caused by the FOMO, by the fear of missing out. You know, you've got this fear of losing the profit, and you just think I need to take some of this profit out and put it in my pocket. And yeah, it's the fear of losing that profit. That's where it comes from. And the only time I've really done that is on bigger trades, you know, on the big trades, on the big cash account. And you know, when there's thousands of dollars at stake, you kind of like, it's just a natural thing, you know, you can't stop it. Your psyche is just, I've got to take some of this profit. You take partial profits. So yeah, I'm guilty. I've done that, but you shouldn't be doing that. Okay, so calling the kettle, calling the pot black. You know, no. It's you shouldn't be doing that. What you should be doing is exactly what I've done here on the Canadian dollar. You should be moving your stop loss down and just following the trade as far as you possibly can. And if it goes back and takes it out, so be it. You know, that's the right way to do it. That's the proper way to do it. But yeah, I've done that on the bigger trades. I've been guilty of going, I'm taking a couple of grand out here, taking a few off the top, and just I'm banking that. So yeah, I've done that. Totally done that. Yeah, but don't do it. Yes, lunch a lot. If a trade is in drawdown and I think it's just become invalid, I will trade it early. I will close it early. Absolutely done it many times, but I'm not doing it this time because I've just fundamentally still sort of married to this and thinking that it can still work out. There's also still room for it to go up. It could still change its mind and go up. So I haven't done it. But in many cases, I'll look at a trade like this and go, it's done. Let it go. Just close it out and let it go. Walk away, and start again. Many times I've done that because the quicker you can get out of drawdown, the better. So if you can get out for a $50 loss rather than a $250 loss, do so. Do so. Absolutely. Exactly the opposite to when you're winning. When you're $50 in profit, don't get out. Hold on for the $500 profit you're targeting. But when you in drawdown and you can get out quickly and you just feel like this trade is definitely gone, then yes, many a time, get out for the smallest losses possible. I've taken many a small loss just to get rid of a trade because I can just feel that trade is done. It is no more. US dollar CAD is at 61%. Okay. Which means it could turn around and go back the other way. It's possible. Stop losses in profit. Yeah, I'm kind of hoping it goes all the way though. But yeah, 61%, that's probably an area of concern. So yeah, that's very good chance it could actually turn around then. Okay. US dollar, Canadian dollar, my thesis is following. Okay, let's have a look at it. There's your US dollar, Canadian dollar. It's in a range, top, bottom, look, top, bottom, top, bottom. So, pretty straightforward. I'm expecting it to get there, to the bottom, because it always does, right? That's as simple as it gets. Seldom stops in the middle, normally gets to the bottom. So that's what I'm going with. Why did I take the trade? It broke structure, broke the trend. It counter-trended, it's going down. That's why I took the trade. Why am I targeting this level? Because it reaches that level on a regular basis. Will it do it every time, 100%? Who knows? Maybe not. Maybe this will play out and will go up. Who knows? But, I mean, we can't predict the future. But what we can say is that historically, it likes to get to that level every time. So I'm working on historic information. But it might get to that level again. At least I'm hoping it will. And that's my thesis on it. It's not complicated. That's it. Straightforward. Same as the FTSE. What's my feeling on the FTSE? Should get down to these levels because it likes to get down to these levels. So I'm hoping it will get down to at least this level and we can start looking at it. So that's my thesis on that one. Yeah. Would you call the 1 hour bearish trend on the US dollars a valid trend with a potential long on its break? The bearish trend is valid. It's valid. Even on the 4 hour, it's valid. What you do have to be careful of is it might break that and go to the upside. And another thing you do have to notice about the RSI, if you want to use the indicator again, just for information, as the South African Rand has done that. Okay. It's broken to the upside on the RSI, which tells you that it could be moving back to the upside on the South African Rand. So that's why I haven't sort of got out of it yet. It looks like it might still have an opportunity to go back up. Yeah, pleasure. Okay. So your stop's not always the same. No, my stop is always the same. My stop's always the same. Don't get confused by this, okay? Don't get confused by this, okay? The initial stop that was chosen for the trade was $250. It was in $250 up here, okay? It was up here somewhere. And then the trade went into a profit. last night, and I know that this Canadian dollar is a lunatic. I thought, you know what, it could just have some stupid news event last night, spike it back up and take it out. So I moved the stop loss $100 into profit, and I've left it there. And I just haven't moved it, and I've left it in profit. So don't get confused by that. That's me managing the trade and moving the trade into profit. That's the original stop loss was $250. But now that the goalposts move now because you're in profit, and then you move your profit up and you follow the trade up with the stop loss. That's how you take your profits. You don't click out, you just follow it up with a take profit. So don't get confused by that. My stop losses are the same. Apart from, okay, 276 and 253, it's kind of in that level. I don't make them exactly 250, okay. There's one for 218. It's in that region, 220, 270, 250. You don't have to make it exactly $250, but in that sort of region, so that they're all pretty close. You know, I'm not going to split hairs for $20 or $30 or whatever the case, right? I'm just going to keep it in that region, but I'm not going to have a stop loss for $400 or a stop loss for $300 or $100 because that's way off. That's just way off the mark. You've got to keep it in that sort of line, in that mark, in that area. Okay. That normally comes about as a result of choosing the size of a contract. Like you take one contract, it's 276, then you're like, okay, let me make it 0.96. No, you can't do that. Just it's close enough, right? So just keep it close. But what I'm saying is keep it as close to the 1% as you possibly can. All right. DAX, short man, I'm long on the DAX. 2 days now. The DAX, I haven't traded the DAX lately because it just looks a bit flat. There's the DAX. It's just been looking a bit flat to me. It hasn't really done much, and it's just going along to the side here. I'm just gonna delete that line. I'm just looking at this, and I drew this in thinking there's a supply of money up here. It hasn't reached it. There's a line at the bottom here that's a support, and it just seems to be rolling along here. So yeah, could resolve to the downside because it's kind of moving along. It was bearish. You get this bearish run down, broken down. It's hit support. It's sort of bumping along here. Looks like it could easily just carry on to the downside further on, just resolve down. So that is another thing when you're looking at all the other indexes and thinking, oh, they're just going to go up. They're just going to go up. And then you look at this and you think, what's this doing? You know, yeah, it's not to say it couldn't go straight up, but I'm looking at this. It's been bearish. It's kind of fallen down. There was a big 3 red candles down there. It's sort of rolling along here. Yeah, you know, you got that sort of upside down flag here, and that could easily resolve down. And you know, if you look at the whole picture, it rolled over. Okay, went up, it rolled over. That rollover is normally a big sign. There's a bit of a rollover here. You get that bearish run down, and then that's ranging, falling down. I'm quite concerned about the entire market. And as I said to you, I'm actually short on a number of things in the market on indexes, and I wouldn't be adverse to taking short even on the DAX. There's something wrong. There's something. It just feels like everyone's getting sucked in, but I could be wrong. I mean, like I say, I can't predict the future. But if I look at this, and I've seen it before, and I'm just getting that feeling, and this has just been rolling over, and then you get this down, and you get this, and then it just rolls along, and that normally resolves down. So be careful on the DAX as well. I wouldn't take a long, let's put it that way. Not right now. Yeah. So that's just my my overall feeling on that. Okay. That is good. It means a major breakout at some point. Yes, but the major breakout on the DAX chain, in my opinion, is because it was bearish before. Normally, if something is going in a direction and then it goes flat, it'll normally resolve in the same direction. Doesn't work every time, but the higher percentage, it'll normally resolve in the same direction. Jane says we're heading for a market crash. Well, I don't think we're heading for a crash, but I think we're heading for a decent correction. The breakout with volume, good stuff. Yeah, you can use that. If you're using volume, you can use the breakout with volume. There's nothing wrong with that. But a breakout is a breakout. If it breaks out, you're getting the breakout. There you go. And if you want to take the volume and make sure that the breakout is valid, go for it. There you go. And you can even have a look at it with the RSI. You can look at it with a FIB. You can look at it with whatever you like. It just gives you that little bit of confluence, that little bit of information when you're trading. But if we are heading for a crash, guys, whew, beware, because that would be a biggie. That would be a biggie. But something's brewing. Something's brewing. Everyone's just buying. Everyone's just happy. Everyone's just buying. And that's normally the time to run. That's normally the time to hide. When everybody's just happy and everyone's just buying. You know, who was it that said it? Was it Buffett that said, buy when everyone's fearful and sell when everyone's happy? It's never truer than right now. You know, watch out. Watch out. But that said, I don't want the markets to crash because I've got a huge investment account that I don't want to crash. I mean, I want it to stay up as long as possible, especially at my age. I don't want to start again now. But yeah, okay, that's good. I'll keep an eye on it. If there's a crash, maybe I'll sell everything out and, start again. We'll see. Yeah. Right. Yeah. The trouble with gold at the moment, don't short it just yet because it's done the breakout thing. It's broken past the prior high, and it is going up at the moment. So just hang on a bit, wait a minute, and just remember if there is a bit of a correction, gold might do well from it. Yeah, I think where I spoke about earlier, where the interest rate cut is baked into the S&P buy. Everybody's expecting the interest rate cut, so everyone's bought. And I think with the commodities, everybody's expecting the commodity super cycle because the dollar's weakening. So everybody's buying into the gold and silver. So just be careful of that as well. There's a lot of baked into that as well. A lot of news baked into it, fundamental news. If you understand you're trading against people, you're trading against news, you're trading against information, then you understand a little bit more about the markets and where it might go and how that sentiment might change and turn around very, very quickly. So just keep your eyes on that. Tough to short assets when the US dollar is flat currency on the verge of collapse. Yeah, absolutely, Nick. That's the problem. If the dollar does collapse and does go down, it's tough to be shorting everything. And, while I have taken shorts on maybe the UK, it's the UK, the Canadian dollar, it's Canada, as they put it, not Canada. That there's possibilities. I'm a bit worried about my South African rand dollar, Brent crude oil. We'll see, but I'm also worried. I got the Spain and the Jap. There's a couple there that are concerning me, but they're not USA. I haven't shorted on S&P and Nasdaq and that sort of thing, and also, I am watching the Dixie in the sense that it may just go to the bottom. So that means that the commodities will probably go long. So you got that scenario in the background, which is affected by the dollar. So yeah, there's a lot to think about. My live starts. Look, I've set my lives up, but Marina asks about my live. You see, I start my live at 1100 GMT plus 2 on a Tuesday so that most of the European, because I'm in Africa, right? So most of the European markets and markets around that level will be able to sort of fit in similar to my time. And there'll be one or two markets out there that'll be a bit out of that. And then on Thursday, I do a 1400 GMT plus 2 so that some of the Americas and other countries can sort of fill in at a better time. So it's a bit later for the European markets and all that, and African markets, but the American markets and those types of markets can come in at opening, so to speak, so that roundabout for you guys, 9:30, 10:30, 8:30, depending where you are, sort of filling into that time, and I'm starting in the afternoon here. And then the European markets can also join us on a Thursday as well. So I'm trying to sort of fill a gap so the whole world can get involved, because I'm not just trading for you guys like some of the other live channels are just there for the 5-minute trades, take a trade here, take a trade there. I'm not here to take trades, guys. I'm here to show you talk about trading, to chat about trading, to iron out the issues with trading for you, and to try and help you along with your trading, because it's your trading at the end of the day that you need to get right. So I'm not here, for example, for copy trading or check what I'm doing or look at this, I made $1 million or whatever. That's not what I'm here for at all. I'm not here to show you how much money I made or lost or anything to that effect. I'm here to help you iron out your own trading, and I'm here to help you get along with your trading. So with that said, I'm not trying to start a live show at opening time or start a live show at whatever time. I'm trying to start a live show so that everyone can get involved. So on Tuesday, 1100 GMT plus 2, Thursday, 1400 GMT plus 2. Our videos that come out on Mondays and Fridays are there for you to learn from, there for you to get some information from. Our members' videos are there to support the channel, and they give everybody what I'm doing on trades and what have you on a daily basis and stuff like that. Okay, there you go. That's just a bit of information on that. Do you enter in a trade after you stopped out? I'll re-enter a trade after I've stopped out only if it's a new trade. So never revenge trade. Never, ever, ever revenge trade. If you get stopped out, don't go, oh, it's going my way now, I'll get back in. No, don't ever do that. If you want to get back into a trade, I mean, I'll trade Brent crude oil 1,000 times. I'll trade the South African Rand 1,000 times. I don't mind. I'll trade them over and over again, but only if it's a genuine trade. In other words, I won't get back in on a revenge trade. I'll wait for all the criteria to play out before I get back into the trade. Because if I got out of a trade on stop loss, it's because I stopped out, which means the trade was invalid at that point. And there's no point in getting back into the trade. So when I'll get back into the trade is when all the criteria play out for me to get back into that trade. I won't not go back to a product because I lost on it. I'll go back to a product if there's a trade on that product. Okay. Okay, so guys, it is time. I've been here a long time. Time for me to go and do some things. Get on with my life. So guys, it's been fun again. It's been an excellent show. I've been had a lot of fun today. And there's been a lot of you guys on board, which is great. I'm glad to have you guys here. It's absolutely insane. Loving it. Love having the A-team. Love having the chat with you guys. And thanks for keeping me company. It's great. I love that. That's why I do this, because I get company from you guys online. But guys, I'm going to be on my way now. I'm going to hit the road, and I'll be back for the next live show on Thursday at 1400 GMT plus 2, and we'll talk about this all over again, and we'll do it a little bit better and a little bit more fun. It's been a good stream. It's been fun having you guys here. As I always say, keep your feet on the ground, reach for the sky, make lots of